All right. What's up, everybody? Let me know if you can hear me in the chat. Thank you for joining. What's up, Michael, Keith, Thomas, Algo Andy? I like that name. Here we go, Gary says. Can you see me and hear me now? Awesome. Hey, Joyce, good to see you. All right, Kevin, do a little testing 1, 2, 3 to see if they can hear you.
Okay, this is a test to all 74,000 people who are watching. Actually, it's less than that, but I wish it was 74,000.
I wish,
But I
yeah.
think if people can hear me, just type YK for yes, Kevin. Uh-oh.
There is a little bit of a delay.
Yeah, okay.
Awesome. Yeah, we just got to get used to that delay. Cool. Okay, let's not waste any time here. We got a special live stream for you guys. This is our first live stream together, and our first collaboration in over a year. So, as you know, me and Kevin go way back a little bit, and Kevin, champion trader. I personally learned from him. Super smart guy. Definitely recommend also checking out his channel too. I put it in the description below, so do check that out. Today's live stream is, I think, interesting. You know, I don't think it's a common thing, but today we will be swapping strategies. Let me pull up the agenda, actually. It might be easier. Let me pull up the agenda and share screen. Okay, give it a sec. I just want to make sure they can see it. All right, so we're going to be swapping strategies today. A rough rice and natural gas futures strategy. We're going to be doing a code review of both strategies, and then also comparing the strategy performance statically, so a static back test versus a walk forward for both strategies. We're going to be talking about, so Kevin's going to do his side on TradeStation. I'm going to do my side on NinjaTrader. As you guys know, we use different platforms, and we're also going to talk about the differences as well. We'll also talk about parameter variation discussion on our walk forwards, how we determine what parameters to modify and the ranges. Me and Kevin do it a little bit differently, so I think it's really important to talk about those differences and why we do them differently. Closing price differences between TradeStation and Ninja, so we'll talk about that as well. And then finally, we're going to finish off with a score out of 10 if we would trade those strategies personally ourselves, with 10 being we're going to trade it live tomorrow, and 1 being we're not going to trade it at all. So we got quite the lineup for you, and really excited to do this live and change things up. Tom says, thanks for doing this, Kevin. Awesome. Love
All
that.
right.
I woke up in the middle of the night to see you guys. Oh, that makes me smile. That makes me smile. This is going to be interesting because I work with both of you. Good. I think it will be. It's good to compare and contrast different methods. Okay.
Yep. See what other people are doing and see the things we'll do the same and things we'll do differently. I think that'll be kind of enlightening.
Exactly. Yeah. Thank you to both of you. Real alpha here. That's right. Alpha only. All right. So let's start off, Kevin. I will do the code review for, so the strategy that I shared was a rough rice strategy. In Ninja, its symbol is ZR, and in TradeStation, it's RR. So Kevin, I'll start with that code review, and then we'll
Okay.
switch over to you, and you can do the natural gas strategy, which is the one you supplied.
Perfect.
Cool. All right. So let's maximize this. So I actually updated to the latest version of Ninja on my dev computer, Kevin, a couple months ago. I decided holding off on it for a long time because, as you know, I think you made a video on this, but updating software sometimes breaks things.
Yeah.
So I did update it and thankfully had no issues, which is rare to see, but I did like that. So that was good. Okay, so here is the rough rice strategy. It's called, it's really long, but basically on my strategy names, I like to put the bar size and then prepend it with the symbol. So ZR, and then this trade's 14 40-minute bars. Just helps me know when I enable the strategy what settings to do. Obviously in NinjaTrader you can do templates, but it just helps me. So this is the format for NinjaTrader. It's in C#. It's a little bit more complex than TradeStation. There's a lot more, you have a lot more access to the code, but that means more setup as well. This strategy basically uses the CCI indicator, commodity channel index, I think is the full name, for both its long and short entry. So here we see it will go long if it crosses above negative 100 CCI, and then we'll go short if it crosses below a 70 CCI.
Hey Jacob, real quick, somebody's
Yeah,
asking if you're using Ninja 815 or 816.
good question. I believe it's 6. I believe it's 6. Yeah, 8.1.6, Terrence. Good question. So those are the entries. What I do like is that the long and short both use the same signal. Obviously the values are different, but as we'll talk about ongoing, simpler strategies tend to work better. And especially when you use, the same indicator for each side, I mean, obviously I don't have a lot of data on it making more money for me, but it's sort of less overfit by using kind of that same signal and not using multiple signals and different ones as well. Sometimes they can be different. In a lot of my strategies, they are different, but I do like that about this strategy. So those are the entries. Those are entering a trade. Now, how does it exit? So it uses 2 exits. It has a stop loss. The default is $1,500 per contract. So this is based on one rough rice futures contract. And then it has a sell profit of 15. So what's sell profit? Basically, it's selling after 15 bars if it's in profit, meaning that if I enter the trade and 15 bars have passed and I'm up, basically my unrealized gain is above 0, it will exit. If it's not 0, then it will stay in that trade until it's above 0 or the stop loss hits. So those are kind of the different pathways that can happen for this trade and for the exit. There's no best exit, as we know, Kevin. There's pros and cons to profit targets. There's pros and cons to exiting after a certain amount of time. Obviously, when you exit after N bars, it's really great on trending periods when you're right? So if it keeps going in my direction for those 15 bars or more, that's great. But not really great on choppy markets or big reversals, because maybe it reverses 7 bars and then we hit stop loss. A profit target might have been better in that scenario. However, it's how I tested it, and it's what gave me the results for me to decide that it was a good strategy.
Look, I'll just add something there. The crazy thing that I've found, I use that bars since entry quite a bit, and I found it pretty useful. And I'd been using it for a number of years, and then I saw in an interview with John Henry, who owns the Boston Red Sox baseball team, legendary trader. And he mentioned in this interview that's one of his favorite exits. Just the bar since entry, not with necessarily with bar since entry and a certain profit target or a profit amount or a certain loss. And I've tested like every combination of those of bar since entry plus the profit target or bar since entry plus only the losing trades, after 10 bars, just get out of the losers and that kind of thing. And what's interesting, I know you said you found success with the profit and the bar since exit. I've always just found that the bar since exit, just by itself, win or lose, which it doesn't feel right to me, but win or lose, that turned out to be like the best one that I end up using quite a bit. I like the one where you either just get out of losers or you just get out of winners after so many bars. But some of my testing shows that it doesn't really matter. But so I know in your case you used it, but that's just something for people to think about is you can use that, you can use the opposite, or you can use neither.
Yeah, yeah. There's so many creative ways to exit, right, Kevin? It's
Yeah.
not just the default is profit target stop loss, but that isn't always the best, right? That may only work in certain scenarios, and it's important to test everything. I'm just going to show you some example trades from the system, and then we'll do the natural gas strategy on Kevin's side, just showing you the exits and trades. So as we can see, let me show some examples. Sometimes it hits stop losses, I should say. Or was that? So there's a stop loss. And then see here on this trade, we're long and it goes against us a little bit, doesn't hit stop loss yet. And then once 15 bars have passed and we're in profit, it exits. I don't know if more than 15 bars pass in this scenario, but sometimes it may exit at 16, 17, 20, 30 bars, depending if we're in profit or not. So it's an interesting way to build your exits. Also, what can happen too is your short signal can override your long signal. We see in this trade here. Let me highlight it for you. So we were actually long here, and we see a sell short. Well, a closed position would happen first, and then going short. That can happen as well too on trading systems. You want to trade everything long and short. Kevin will say this as well, but going long only and short only in trading systems, I've tried it. It's not great. It works some of the time. It doesn't work all the time. Kevin, anything to add on that?
No, I agree. That's kind of the same thing I found.
Good. Good to hear. Okay, I think that was it. If you have any questions about this, just type in the chat. But we are going to go over to Kevin's natural gas strategy, which he shared with us.
All right. Let me
I'll catch up on the
share my
chat.
screen over here. All righty.
I wonder if that's because after X bars, you were looking at a totally different market. Not sure what you mean by that, Keith. Maybe expand on that. You're looking at it.
I'm guessing what he means is you're looking at just a different market regime, like, and I guess the way I think about it is, and the way that if I recall that John Henry interview, he mentioned it is any signal, no matter what it is, has a limited life. Just because there's a breakout doesn't mean the breakout lasts forever, right? And there's going to be a certain amount of time where that breakout might be good, and I think that's might be what we're kind of talking about here. So uh, maybe I'm wrong, and if I'm wrong, who was it, Keith? Yeah,
It was Keith, yeah.
he'll mention it. But in the meantime, I'll talk about the other strategy. And just so people know, since we are talking about NinjaTrader, I'm on version 10.0 of TradeStation, but I'm on update 65, which actually is from 2023. And you might say, why? There's been 20 new updates since then. Yes. And every update with any piece of software that I've ever seen breaks something, fixes something else. And I've just made the decision that unless I need an update and I know it's going to fix a problem that I have, I'm just going to leave it because I don't want to put my money at risk with some, I don't want to say untested version, but not thoroughly tested version. Um, I think that's crazy. And I haven't looked into it, but I heard like Interactive Brokers had a thing with their software where you can download the newest version and what they call the newest stable version, which is like a few back that people have more fully tested, which I think is a good way to go. For a while, TradeStation was actually pushing updates on users, and they might have gone back to that where it's just automatic. And I think that's terrible when you have real money on the line. And they're not the only people to do it. I've had Microsoft Excel issues where it was auto updating and it killed stuff of mine. Now, I didn't have real money on the line for that, but it's just software. That's what software does. So I've frozen it on update 65. Okay. So that being said, let's take a look at this natural gas strategy. And this is all the base code. You can tell, as Jacob was saying, that TradeStation's usually a lot simpler looking than Ninja. Uh, Ninja has more little settings that you can put in the code that aren't necessarily part of TradeStation, but TradeStation's pretty easy to read. So this one, once you set these three parameters, up days, down days, and moving average days, and days here doesn't necessarily mean days. It could be bars. I'm doing it on daily bars, so in this case it is days. But if you did it on a 60-minute chart, it would be four 60-minute bars. So it really should say bars. But what it does to buy, it's looking for the highest close ratio of the last, in this case, 4 days to be less than one. And you could say, well, what does that mean? Because actually, when I did this, I was like, what does that mean? All it means is if you have four down days in a row, you're always going to have close divided by the previous close less than one. So it's looking at the last four, I guess 5 days, and comparing the closes on those days. And if all of them are down, then you buy. So it's kind of a mean reverting. It's looking for consecutive down days, and I'll show you that in a second. And then what I like to do for most strategies is have everything symmetric. The only ones I don't like to do that are stock indices because stocks tend to go up, but most other markets, it's good to be able to go long and short, and I like to be symmetric. But in this case, the rule is symmetric, but the parameter is slightly different. So I did 3 up days and 4 down days. And that was just probably through some of my initial testing, which I'll kind of walk you through a teeny bit in a little bit. So that will sell short. Those are your entries. And then the exits are just a moving average. Uh, when the close goes above the moving average, chances are it was probably moving in your direction. So then you sell and opposite for uh, buy to cover to get out of the short strategy. Now, of course, this entry, if you're currently short and this happens, it will just reverse and go long. So it doesn't necessarily need to use these exits. So in this case, these exits could be part of entries. Now, let's take a look at, let me make this bigger, this TradeStation. Whoops. Okay. So here are the some of the signals. So I'm just going to zoom in on something around here and then we'll see. So you can see, for example, let's just look at this trade right here. You can see it looks like there's some up closes here, and so then it goes short, and that was exactly the wrong thing to do, but sometimes it is. And then this here, there were a bunch of down closes, and then it said buy, and in that case, it turned out to be a good thing. Um, but you're going to have both. And what I always caution people, whenever they look at a chart with some trades on it, don't draw any conclusions other than, hey, it's not doing what I thought it was supposed to do. As long as it's doing what you kind of expected, don't dismiss the strategy just because, wow, look at this big loser, so I'm going to toss this strategy. Or look at it has one, you see by the red lines, 5, 6 losers just in this, what, 6-month period. And you might say that's enough to dismiss it. Don't do that. That's usually a bad way to evaluate strategies. There's much more thorough ways than just looking at one chart. But just my experience talking to a lot of people will throw things away based on a few trades. And, or worse, they'll see those bad trades and say, oh, I've got to engineer those trades out. So let me add a filter and then go rerun the whole back test. And oh, now it looks good. And it's a road to nowhere. So just want to warn people about that. But that's the natural gas strategy. And then I'll turn it back over to Jacob. But what we did with those is he gave me the rough rice one. I used ChatGPT to convert it into TradeStation. I gave him the NG one. He used ChatGPT to put it into NinjaTrader. And then we decided to test both on each. And I'll talk about the rough rice ones later, but you can see those over here. So I will
Yeah.
stop my sharing and turn it back over to you.
Yeah, just adding to that, when we put them in the ChatGPT, I mean, all of us expect it to work perfectly, right? So when I put Kevin's TradeStation easy language strategy into ChatGPT and said, or sorry, Kevin already did that. He sent me the NinjaTrader code. It didn't work out the gate. There was some syntax errors. Obviously, Kevin doesn't know too much C# since he's a TradeStation god, if you will. But yeah, ChatGPT, when it tried to convert it, it won't get everything right. And you're going to have to go in there and modify it. And you still need the domain knowledge to use ChatGPT perfectly. So just be aware that if you're looking to convert code, I know a lot of you also convert to the Pine script on TradingView. It's going to get a lot wrong. Expect it to get 90% there, but the remaining 10% you're going to have to go in yourself and fix it. So just a heads up on that, and it's worth to talk about. I'm going to catch up on the chat here, Kevin, before I go ahead.
Okay.
Alex says, Kevin, are you going to Italy next year?
Yes, I will be in Padua in April for with my friend Andrea Unger and also my other friend Michael Cook. He won the World Cup Trading Championship a couple times. He will be there too. I mean, it's Andrea's show as far as I think it's like a 3-day event, so I'm only going to be there for 2 hours of it, but I will be there.
Cool. Uh, do, 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 do. What made you both decide to incorporate CCI into your strategy? So Jamal, great question. CCI was just for the rough rice strategy, was not in the natural gas strategy. And when I am testing trading systems, usually I'll have an initial idea on what that trading system looks like. And to test that idea, I need some type of signal. And to generate that signal, I can do indicators, I can do price action, I could do seasonality, et cetera, et cetera. And in that case, the CCI signal did meet my needs and pass my criteria. So that's why I used it. But I do test everything as much as I can. But yeah, Kevin's strategy did not have CCI into it. So I think you might have missed out on that. His was different. Good
I
question, though,
use it.
Jamal.
I do use it on some other strategies I've created, and it seems to be um, just a pretty good one in cases. But it's like anything else, I could say moving average crossovers are good in certain situations. So it's one of those things where you just kind of have to test. You just have to test a lot of things, and you find out most things don't work. But CCI is one I've seen historically that tends to work more than others.
Agreed. TradeStation is in my doghouse with their new release. Yeah, I guess it's new releases are tough.
Yeah, what happened was there's Dave who's asking that question, who made that comment, is one of my students, and there's software we use with that's especially part of my course. And the newest TradeStation release actually broke that software because of some things they were doing. And then they just released an updated version, which they said fixed it, and it didn't. But I always tell, like I said, I always tell people, stay back. Don't think. A lot of people tend to think with software like the latest and greatest. I need it, because it's got all the best new stuff. And that's usually not the case, and not necessarily the case. Sometimes it's better to hang back, let everybody else be the beta testers, and you wait until it's good. So, like I said, I'm on a 3-year-old version of TradeStation, and I do not plan on upgrading um, until I am forced to. Which maybe
Amen.
never, but I know, and it's not to say it doesn't have bugs with the version I have, but I know what they are. I know how to deal with them, and there's nothing that's really going to surprise me.
Yeah. I on my VPS with my production, my live trading, I still use a very old version of NinjaTrader. I think at this point it's probably 4 years old. So I haven't upgraded that one. I don't plan to, but for development purposes on my local computer, I'd use the latest. But Kevin's totally right. With anything in life, even with Windows updates, I try to avoid. Even my new phone stuff, I wait and hang back. It's usually a good practice.
Yep.
Okay, so love ChatGPT, but have to do so many revisions. True. I had very mixed results with AI code. Yeah, it's
A
not
lot of
perfect.
people, sorry, a lot of people say Claude is actually better. I haven't tried it, but a lot of people say Claude. Or another thing you could do is write it in one and then have the other one check it, and sometimes that'll help.
I believe that was a swing strategy, Keith. Was not an intraday strategy. Natural gas.
Yeah, it's on daily bars, so it
Yep.
almost by definition it has to be
Yep.
uh, overnight.
What's up, Mark? Do. Kevin, does your strategy work on 1440 minute too? Because the close of the daily is not stable. I want to click the no.
Um, well, I show people, and we'll try it live since we're doing everything live here.
Let's do it.
All right, so I won't give away all the secrets, but what we'll do is, so this is just the base version, not the walk forward version. I just want to show you. We'll call up. Here's what the equity curve looks like. I'm going to talk about this later, so this isn't what I want to talk about now, but that's daily bars. So let's just change it to 1440-minute bars and see what happens. And honestly, I do not know what will happen. And there it goes. Not as good, right? So had a nice wow, what is that? 20 more than $20,000 drawdown, made 55,000 profit. Doesn't look that great. And then you go to daily, and maybe is this a good time to talk about the daily versus and yeah, so the daily bar looks a lot better. More profit, less drawdown, smoother curve. Uh, is this do you think this is a good time, Jacob, to talk about the daily and settlement
Yeah,
issue?
go for it. Let her rip.
Okay. So, I forget who commented, but said the dailies are not as stable. And you might say, well, why? A 1440-minute bar is basically like a 24-hour bar. So in TradeStation, if you're doing an intraday bar, uh, and meaning a time-based bar, so like 1440 minutes, the close of that bar will be the last price traded. Okay. That makes sense. So if it's a 60-minute bar, it'll be the closing for the day will be the closing price, the last traded price. Okay. Daily bars are a little different. daily bars include what's called the exchange settlement price. And what that is every day at the end of the day, the exchange, the CME in this case, well, really like NYMEX, but it's all CME. They go and they determine what the settlement price is on the day. And they do that, they have certain rules to do it, and it's during a certain time of day. Unfortunately, for many markets, it's not at 5 o'clock, which is when the last price traded would be. In the case of natural gas, I believe it's around 2:30, 2:29 to 2:30 Eastern. That's when they determine the settlement price. Now, something like gold, that's 1:30. Interest rates are 3 o'clock. It's very weird, but what ends up happening is that becomes the daily price close in TradeStation. Okay. And so what happens if you're running a chart on TradeStation, you will see if you have a daily bar up, a live chart at 5 o'clock, it'll show the close as the last price traded. And theoretically, what's supposed to happen between 5 p.m. and 6 p.m., the exchange determines the settlement price, and that's supposed to get pushed to your chart, and your chart should automatically update with whatever that settlement price is. Then your codes run, and then your orders placed. And you notice I said that's all theoretical because theoretically that's what's supposed to happen. But I've been doing this long enough to know that one, the push doesn't always occur. Sometimes you have to manually refresh a chart. Sometimes your code will run before the push if it happens. So you get a bad signal because sometimes there's a difference, obviously, between the 2:30 price and the 5 p.m. price. And sometimes the exchange is late, from what I've seen, in getting that price to their data vendors or, in TradeStation in this case. So, and I can't prove that, but that's just my feeling is sometimes that doesn't happen quite on time. So what you end up getting sometimes with daily bar uh, strategies is you'll get what I call phantom signals, where you'll see them now, but you'll refresh your chart or you'll close TradeStation and open them up, and a trade will disappear because now the conditions are not met where before they were, or vice versa. And so I've started to go mainly to 1440-minute bars to kind of get around that because then it doesn't have to worry about that daily update. But I will say daily closing price, the exchange settlement close, is a good thing to know because that's what your daily equity run for your brokerage statement, it uses settlement prices. When it figures out how much margin you need and if you're going to get a margin call, it uses settlement prices. A lot of the big players, they only look at settlement prices, because they have these big portfolios. The settlement price is what matters to them. So I think there's value in that settlement price that doesn't show up normally, but it's there. That value's there. But the problem is it's hard to create algos with daily bars that don't run into other issues. Okay, so that's daily versus settlement. Probably just confused everybody. So let's confuse you further. I was talking about TradeStation. TradeStation, 1440-minute bars. Closing price is the last price traded. Daily bars are the exchange settlement price. But you go to NinjaTrader, depending on the data provider, and maybe you can talk about this, Jacob, what you see with daily and 1440 there.
Great, great explanation. What you guys just heard is something only an expert would know. I mean, to know this difference, you have to be in the game. So appreciate that, Kevin. Thank you so much for that explanation. So from my end, once again, I use NinjaTrader. All right, NinjaTrader has different data providers than TradeStation. It's so weird because yes, we're getting data from the CME, NYMEX, and XYZ, but your data provider, I don't even know how to explain it, Kevin, but they can how they amalgamate data or show the data, it's different, okay? And we can't control that, unfortunately. I'm going to share my screen here to show you what Ninja says on their end if there's a difference between daily and 1440-minute bars. So here's all the data providers that NinjaTrader supports, right? NinjaTrader is they're more friendly to third-party data providers where I believe with TradeStation, Kevin, correct me if I'm wrong, it's just one.
Yes.
Okay. So I use this one that I'm highlighting, Continuum CQG. Okay. And if you scroll over here, look at this. Daily bars trading hours on the right. It says extended trading hours. Settlement adjusted close price for daily bars, yes. So it does use the settlement price on the daily bars. I believe Kevin just mentioned that as well, that daily bars use that price as well. So that sort of matches up. Now, from my testing, Kevin, I only tested on gold and S&P 500 futures, and I just did 1 day. So I tested a daily bars close price and a 1440-minute bars close price. I can't pull it up right now. It's somewhere in my Discord. But the prices were the same for that 1 day. I did not test, 10 years worth of data. I did not test other markets, but they did line up. If we were to conclude everything that Kevin just said for you guys here to help you guys out, in my opinion, test strategies on daily bars and 1440-minute. I think you can trade both and be successful. However, personally, I am moving over to 1440-minute bar testing a little bit more often and doing it more often than daily bars just to slowly get out of the daily bar practice. However, personally, I have some daily bar strategies that have done well for me. So I can't say that they're super bad for you. Kevin, anything to add on that?
No, I have some older strategies that use daily bars too, and I've just come to expect that there will be more automation issues, and meaning, there'll be some of these phantom trades, and I just have to kind of stay on top of it. But yeah, I like the 1440-minute better. But that chart from Ninja, that was great because it showed, I saw yes and no's, and
Mm-hmm.
the data providers are not consistent. They do what they want, and so you need to, as a trader, you need to realize that. The other part of that is with all those data providers, and I use TradeStation data, which isn't in that table, but um, they all do. If you're testing with back adjusted continuous contracts, which most of us are using, that's really the only legit way to test futures. Um, there you're going to get different results with different data providers because they do the rolls at different times. Even if they use the same calculation method, uh, they might roll a day or two differently. And you might think, well, that's not going to matter. Most markets it doesn't, but I've seen things like the meats are one that I've always noticed. Lean hogs, live cattle. I had a great strategy in TradeStation. I moved it to a different data provider. Strategy just fell apart. I mean, it looked awful, and I looked into it, and it turned out it was just those 2 days. It was 2 or 3 days different role. But what happens, the reason for that is you've got a lot of agricultural people doing a lot of spreading with different contract months, and they're moving the spread from, say, uh, June hogs to December hogs, and they're moving a lot of things, and the prices are changing. And so, depending when you roll, you're going to get a lot of different kind of uh, price action. It's kind of interesting, but just people should keep that in mind too. Don't expect things to work exactly the same with all these different data providers. And so my my suggestion to people is Whatever you're using for data to build your strategy, make sure you're using that to also trade live with. Be consistent.
100%. Appreciate that, Kevin. Yeah, once again, only people that have been in the game for as long as Kevin know about that. This is the more you trade, you're gonna find a lot of small nuanced things, and we could probably spend 12 hours straight, Kevin and I, talking about all those small things. Unfortunately, we don't have that much time, so let's keep moving on. That was great, though. Thank you, Kevin, for that. Okay, so let's move on. Let's go on the agenda here. So since I'm sharing my screen, we'll do the performance on my side first between the two strategies,
Okay.
and then we'll head back to yours. So the rough rice future strategy, this is the static backtest. So this is using no walk forward analysis. We both recommend using walk forward analysis. However, when you start with the strategy, you usually have some type of static parameters that you're setting in terms of to doing your initial backtest, your initial feasibility test. So this is the static backtest of this system. One question we get a lot is, what year do you start with and what year do you end with, right? It's a great question. Super hard to answer. Obviously, the most common one is use as much data as you can, which is usually around 07, 08 for most data providers. This strategy, I used 2018. Why, Jacob? Why did you choose 2018? There's a myriad of factors, but essentially, back when I was testing this strategy, 2018 was the year that I picked. That's when kind of volatility picked up. And I have a feeling, this is not a quantitative process, but I have a feeling patterns back in 07, 2010, 2011 are just not recurring anymore. And that's my bias, which I know is not a great thing. So I'm trying to use more recent data. And my plan is over the future is to, once I have more live trades with this recent data back to 2018 or 2020, I can test my P&L and compare that with trading strategies using back to 07 for my start point. So it's a super advanced topic. Kevin may have a different opinion, but 2018 is my start date, and that's here. Okay. So there's the performance. What am I looking for in a strategy? Return to drawdown is the metric that I use. Kevin uses it as well, and I want to see that above 2 for at least the initial backtest, and of course in the walk forward. I don't think we can dive into the stats too much. That's usually the only metric that I care about. Obviously, we want a strategy to be profitable, but we want it to be risk-adjusted profitable, right? Net P&L is not the final answer in a strategy. You can have strategies that have really high P&Ls, but the main question is, can you handle the volatility live? And that's kind of where return to drawdown comes in, and that takes the net profit divided by the max drawdown. Anyways, there's a static backtest for rough rice. Now, what about the walk forward? Did the walk forward do better or worse than the static backtest? All right, so Ninja, unfortunately, cannot chart a walk forward, which is a common pain point shared between me and the community, but it is what it is. So unfortunately, we have to look at numbers. So the walk forward, net profit of 25K over the same period compared to 29. So it made 4,000 less, but let's check the drawdown. That sort of matters too, right? So here's a tip for your Ninja folks, okay? Ninja is sneaky. It deceives you sometimes, unfortunately. We see a max drawdown of 4,000 here, right? On the walk forward final results. But it's actually not the max drawdown, it's the average max drawdown of all iterations. If you want to get the true max drawdown, you have to scroll up here and sort by max drawdown. And if we look at the lowest number, it was actually 8,800. Deceiving, right? Imagine you're a first-time user and you run a walk forward analysis and you go, oh, my max drawdown is only 4K. Oh, I have a 5.0 return to drawdown on this walk forward. Cool. It's not true. All right. So that's a deceiving practice. Unfortunately, NinjaTrader is the default settings. Kevin, when he does TradeStation, can talk about a lot of deceiving things TradeStation does as well. But you have to know as an algo trader, if you want to be a good algo trader, you got to know these things, right? Because if that max drawdown was bigger than 8,000, you may have not traded that strategy. So you need to know these small kind of nuanced things. Okay, so did the walk forward do better than the static? The max drawdown went down by 1,200, so that's good. But the net profit went down by about 4K. So it was probably a little bit slightly worse on that walk forward analysis. As far as what parameters did I use to walk forward, that was the stop loss and the exit after M bars and profit. How do I pick what ranges to test? I honestly don't have a method right now. Usually I pick around 3 values per parameter. I don't have any data to say, oh, 5 parameters or 5 iterations is better than 3. Haven't collected that data or tested it, but I do like to vary them to see if the strategy can still survive, right? If I change the stop loss the next year to 2,000 or 2,500, how does it affect the performance? The strategy should still do well out of sample with those very parameters, right? That can show that it's a robust strategy and not overfit. So that's why you want to vary them. As far as how far you want to vary them, maybe when Kevin talks, he might have more data on that. I don't have any data on how many iterations you should do or how many you should vary them. I like to vary them a little bit, but not too much type of thing. So I test between 10 and 20 N bars in profit increment by 5. So it's testing 10, 15, and 20. And then the stop loss, I test between $1,500 and $2,500 per contract stop loss increment by 500. Okay. So that's a rough price strategy. That's the one I built. And let's do natural gas one that Kevin sent me. So this is the static backtest for natural gas, no walk forward, start date 2016, end date today. So not terrible. It's at equity peaks actually right now from the static backtest. It has an above 2.0 return to drawdown, 43K net profit, 20K max drawdown. So that's not too bad. We want to see strategies go long and short. That's good to see as well. All that's good. Now, if we go to the walk forward, did it do better than the static? So the walk forward, we had a 39K net profit. So the profit went down 4,000-ish, 4,000 per contract. These are all based on E-mini contracts, the full size, if you will. Now the max drawdown, once again, NinjaTrader's deceiving. Walk forward, it says 8.6K. That's not true. If I sort here, it was actually 17,000. All right. So the drawdown on the walk forward went down about 3,000, and the net profit went down about 4,000. So slightly worse, but not massive, to be honest. What else do I like to see in strategies? Obviously, the walk forward should perform to do well and kind of maintain above that 2.0 return to drawdown. And I do like that specifically for this natural gas strategy. It's up for this year and it's up in the last 9 months. And we'll talk about when we generate our scores out of 10 if we would trade it as that being one of the reasons. So that's really good to see. Whereas the rough price strategy, at least on my end, was not profitable in the last 9 months. So I don't like to see that. So that was a lot from my end. But yes, that was both the strategies that we tested. This is on NinjaTrader. Now we're going to switch over to Kevin, and he's going to do it on his side with his process and TradeStation.
All right. Let's see here. So, hang on. Okay, there we go. The first thing I wanted to mention, since you said, Jacob, that NinjaTrader doesn't do the walk forward, it kind of broke it up into all those sections. The one thing I don't know if you've ever done it, but I've done it in Ninja. And this is a TradeStation example, but what you would have to do, because this is what I do in TradeStation, is create a different version of the strategy that has this kind of code. And what this code is, it says, hey, during this certain date, which in this case is October 18th, 2010 to April 18th, 2011, use a stop loss of 1,500 and exit bar profit of 20. Then there's another period and the parameters change or they may not change. And if you'd have to do that manually and create a version, but then you could have it all in one strategy in Ninja. Um, and I believe you can do that in Ninja, but you definitely can in TradeStation. And I don't manually do it. We have software that does it for us, but that's how I put together the walk forward curves that you'll see. Okay, so let's first take a look at the rough rice one. Now, I will mention if you look at Jacob's results compared to my results, they're quite a bit different. So, for example, I think he showed $25,000 profit here for the rough rice one. I never got close to that. And I will say the way we set this up, we just swapped strategies. We really didn't talk to each other too much about, hey, what parameters are you using or this and that. We just said, here's the strategy. Let's talk about it. And part of that was on purpose. And I was thinking, well, we're going to be different, which is kind of interesting because, it's two, is it the platforms? Is it the code we used? Is it us? But it just kind of shows you how you can have the same base strategy. Oh, it might also be the chat GPT conversions. And we never really tried to resolve that, but I just wanted to point that out for people. It's kind of interesting. So anyways, I normally, these are the steps I normally run through. And, when we talk about using the fixed parameters and looking at that, that's not even something I normally do. I did it for this because Jacob was doing it. And so we wanted to kind of sort of compare apples to apples. But normally I do some limited testing and then I go right into walk forward if it gets that far. And then I do Monte Carlo. So I'm going to show you um, both just the base, which isn't part of this process, then the walk forward, then the Monte Carlo. So this is the base performance. Eh, not so great. Um, Here's the Monte Carlo for that base version. I look at return to drawdown. It was 0.52. This is an Excel spreadsheet. It does random simulations. That's not very good. So I would say no. Then I did a walk forward version. And again, the parameters I picked and the number of iterations might be different than what Jacob did. I'm sure they were. Because like I said, we talked quite a bit, but not about details, which was sort of intentional. And I also I used 2016 to start. Normally I go back to 2007. Um, but again, this is what it looks like with walk forward. And the area in blue is after I did the walk forward test. I just wanted to see how it would do in a quote unquote live uh, kind of test. Not so great. Again, actually, the return to drawdown's worse here, 0.22. And so that would not pass my criteria. Now, looking at the natural gas, Jacob had his base, this is the fixed parameters. I think he had around 45,000 or 47,000. I don't remember.
Yep.
Um, I had 83,000. Now, maybe I did it a couple of years more. Um, Maybe that's the difference. I don't know. So this is what this looks like. Again, yeah, it looks all right. I look at the Monte Carlo and it passes 1.66. Not really great though. And you can see that it's got some pretty hellacious and extended drawdowns here, which is not good. Then if I do the walk forward analysis, so like I said, I use a tool that does it for me, gives me the code, and then I just put in a separate version of TradeStation, and that's what it looks like. The walk forward actually looks better, which is kind of surprising. Usually the walk forward makes things worse, but um, that depends, I guess, strategy to strategy. In this case, the return to drawdown goes up to a 5, which is really high, and it's almost too high to be
Yeah.
believable, honestly. And so that would pass my criteria there. So I'll turn it back over to you, Jacob. But those are my strategies and how they did.
Cool. So yeah, we can see we both get differences, and they're, as Kevin mentioned, there's a myriad of reasons. It could be the data provider. It could be maybe we didn't do a great job trying to work on the code together. Just slapping into ChatGPT might have not been the best decision, and we could have probably dived into a lot of deeper things with the code itself to get them to match. But I think my idea, or my reason on why there's differences, is the data providers. If we really went day by day or bar by bar, we'd probably see some differences from NinjaTrader CQG to TradeStation. And even like a change of one tick or 1 point can cause a strategy to enter or not enter, depending on the signal. So we saw that Kevin's nat gas strategy looked a lot better in TradeStation than it did in Ninja. It was still good in Ninja, relatively, but his was like double better in TradeStation. And then my ref rice strategy looks like crap in TradeStation, but in Ninja it looks a lot better. So at the end of the
Yeah,
day, go.
sorry.
Oh, no worries. At the end of the day, as Kevin said, whatever you test in, whatever data provider you back test in, that's a data provider you trade live in. I think that's a fair kind of conclusion to that. Go ahead,
Yeah,
Kev.
so if somebody really wanted to dig into it, yeah, you'd want to look, um, the prices, you'd want to look at the code, you'd want to look at some sample entry signals. I'll just share one kind of crazy thing that I saw with this, which is related to TradeStation, which may apply to other data vendors too. But there was a student of mine who had a strategy. We both had the same strategy up on TradeStation. His showed a signal, mine did not. And everything else was the same. But this was like in the past day or so. And we looked at it, and it turned out for one bar, his opening price was one tick different than mine. And that's what, you do the math, that's what triggered the strategy. And so the trade. And so then we looked into, well, why would his data and my data be different? They're both from TradeStation. What I found out, which I never knew, and again, this goes to something where if you do things long enough, you find out just about everything. Uh, it turns out TradeStation has different data servers around the world, and they push data to all these different servers to try to get them to you the data fast. Well, the opening price, like because of like a couple milliseconds difference, showed up in one data stream but not in the other. So he showed a trade, I didn't, or vice versa, I forget. But it was because we were grabbing like almost real-time data from different spots. And the interesting thing about that is after, I think it was 30 days, they said, all data then becomes historic, and then it's all the same no matter where you get it from because it's all standardized. So in real time, you could get different data from the same vendor just because different data servers. But if you go up and test it 30 or 60 days from now, it's all going to be the same data. And so then we would get the same trades, which I was blown away by when I heard that because I never thought that was even a thing. But um, yeah, there's a lot of little nuances. And I always tell people if you don't know these nuances, you should know enough of the nuances that you can break your trading platform or create fake strategies or trick it, via backtest. And if you're not able to do that, you probably don't know your platform well enough because every platform, Ninja, Multi-Charts, TradeStation, TradingView, you know, Python, whatever you're using, they can all be tricked. You just got to figure out how to trick it. And once you know how to trick it, then you'll, you know, you'll know how to avoid that.
100%. Yeah. It's sometimes the cost of doing business is like you're going to find a lot of technical errors with your trades, with your trading systems. And sometimes errors happen live. Sometimes they cost you money, sometimes they make you money, but it's important to know all those nuances. And as Kevin was mentioning, one tick difference that one tick can cause a trade to happen or not to happen, right? If you have a simple moving average strategy at say a price of 5,000, right? For example, hypothetically, and one trader had a tick above that at 5,000.25, causing it to go long, but the other trader did not, and it was at 5,000, that's a difference in a trade, and one trade difference will cause a massive P&L difference in a back test over the course of whatever that may be. So it happens, it's part of the game, and you just need to spend enough time, learn from us to learn about those nuances to sort of get through it. But there's going to be tech errors. They won't happen all the time. In fact, it's minority of the time, right, Kevin? But those are the ones that you think about and that sometimes keep you up at night as well.
Yeah,
So
and you always tend to remember not the times where those mistakes make you money. It's the times when they lose you money. You lose money because of it. Those are the ones that stick with you psychologically, and I think you're right. Over time, they kind of even out. Some mistakes work in your favor, some don't. But over time, it doesn't really cost you a whole lot. But psychologically, I think it costs you a lot because you remember the bad ones. At least I do. I wish I didn't.
I do too. Yeah. Okay, so I think we will move on to our scores out of 10 if we would trade the strategies. I will do my scores first, and then Kevin to do his. So personally, for me, the rough rice strategy, once again, it's ZR and Ninja or RR and TradeStation. I give it a 7 out of 10, meaning that I would not trade it tomorrow, but I'm very keen on trading it. And my reasons were, it did pass my initial return to drawdown. The walk forward slightly does better with out of sample, which is good to see. Simple parameters, which I like. But the reason for the 7 and not 10 out of 10, it has not made money in the last 9 months. And I did a extensive research project earlier this year on when is the best time to start a strategy. Is it a year? Should you wait a year? Should you trade it tomorrow, etc.? And 9 months gave me the best results. It gave me the best risk-adjusted return on when to start a strategy. Kevin, I believe it's the same for you as well. Is that correct, or are you different?
Yep.
Perfect.
That's what I call the incubation phase.
Yep.
And yep.
That's funny. So yeah, so it hasn't made money in the last 9 months. Personally, I'm going to leave it in a simulation account until it does. And from there, I would look at trading it. I'm not trading a rough rice strategy in my live account right now. I would have to look at my sector format. But if it did make money in the last 9 months, maybe it'll take another month, maybe it'll take another year. I then would look at, all right, what sectors am I trading? Can I afford to add another agriculture sector strategy, which this would be? If I can, then I would trade it. So there is still a couple more steps, but pretty much if it was profitable in the rolling 9 months and I have an allocation for agricultures in my sector in my portfolio, I would trade it. So that's a 7 out of 10 for that. The nat gas strategy got slightly higher. I gave it a 7.5. So it passes the initial return to drawdown of greater than 2, which I like. The walk forward does slightly better as well. Once again, simple parameters, doesn't have a lot of rules, and it's made money in the last 9 months. But the reason why I gave it a 7.5 and not a 10 is it doesn't have a stop loss on this strategy. And this is a very controversial topic that we'll talk about. Do strategies need stop losses? And at the end of the day, if you're testing them and you're aware of its potential max drawdown, and as we know, Kevin, your max drawdown can always be higher in the future. It always is, usually. If you're aware of that and you have the proper capital allocation, regardless if you have a stop loss or not, you should be okay. Personally, from my live trading and my recent experiences, I prefer to have a stop loss in each strategy as that psychological save point, if you will, on how much it can lose per trade. And because the strategy does not have it, I would be adverse to trading it live. I'd probably build a new strategy around it that would have a stop loss. That is my personal bias and way I feel about trading systems. Kevin will talk about different views, but That's why I gave it a point 0.5. It's higher than the rough price strategy because it has made money in the last 9 months, but it's not a full 10 because it doesn't have a stop loss, essentially what it boils down to. So yeah, Kevin, feel free to add on that, and then we can go over your scores.
Okay. So yeah, as far as the stop loss, I've done a ton of research on this, and usually stop losses do make the performance worse. I mean, it just there is a price to having that comfort of stop losses. One thing a lot of people don't realize too is stop losses won't necessarily save you in super bad times. They'll save you during a lot of things, but let's just say there was some kind of huge earthquake in California and all the markets just collapse. It probably will be pretty instantly where you might not even be able to get your stop executed. So even though you think you have $1,000 stop loss, it might not get executed, or when it does, it might be $5,000. So that's just something to keep in mind. But definitely not having a stop loss will improve the performance of strategies you see. I'll give you a good story of one strategy I had. It was coffee. It didn't have a stop loss, and I debated this just like Jacob was talking about. And I said, should I trade it? It doesn't have a stop loss. And I looked at the worst month, and the worst month I'd ever had, it lost 3,000. And I thought, well, even without a stop loss, the reverse signal usually gets you out. And the first week of the first month that I traded this strategy live, I had a $15,000 per contract losing trade. And, I'm just watching, and this thing collapsed over like 3 or 4 days, if I recall right. And it was just, I was like, oh my gosh, where's my stop loss? And I knew I didn't have one. But that's the kind of thing that can happen. And that just, uh, that was bad. So I get it. People talk about stop losses. The biggest problem I see with people who set stop losses, they set them too small. And then it's just in the noise of the market. So they'll be like, well, I'll just do $100 stop loss with the ES, which is 2 points. And what ends up happening, I'll do a $2,000 stop loss. Okay. And what happens is my stop losses hit a lot less often. They'll keep getting these 2 point stop outs over and over again, and it will actually be worse than having one giant or a $2,000 stop loss. So just something to keep in mind. So let's go to the strategies. So for the I don't have any notes on this. The rough rice one, as you saw, my performance that I got in TradeStation was like half of what Jacob got. Didn't pass any of my tests, so that one's out. It's a zero. I would never consider trading it. Now, and I hope people realize it's not because um, it was Jacob's strategy, or even though I know Jacob got much better performance, I just go with what I'd see and I'd trade, and what he saw and what he would trade, totally different things. So it's kind of interesting that way. I will also mention, rough rice, just for anyone who wants to trade it, watch out for that. The potential is there for a lot of slippage because it's a very thin market. Um, I'm trading a strategy live now, and I've got to be really careful that, as far as my slippage estimates, because I do market orders, and sometimes I get more slippage than I expect, and I've already accounted for a lot of that. So it's nice now because rough rice is kind of moving, at least it was moving down. I know I was short, but um, the fills can be a problem. Then the natural gas strategy, again, compared to Jacob, I got performance that was twice as good. So, the walk forward version passed my test, had the 9 month period profitable. So I would give that a 9 out of 10 or 10 out of 10. The only reason I wouldn't give it a 10 out of 10 is I'd have to see how it combined with some of my other natural gas strategies, because maybe I'd want to trade those. But everything else, even though it had some big drawdowns, I'd be comfortable trading that. So this is interesting to see how we take what we think's the same strategy, run it two different platforms by two different people, and we get two different sets of conclusions. So that's
Yeah.
kind of, and we didn't talk about this beforehand at all. We just said, hey, let's just see what happens. And this is kind of eye-opening.
Fully transparent here for sure. We all know Kevin hates me now and thinks I'm a bad algo trader. So, uh, a round of applause for him.
Hey, I've had a lot worse strategies than what you show and I show. So it's that's that's just what happens sometimes. But it is interesting, and if we had more time, we'd probably dig into why we're different. I mean, it could be what ChatGPT gave me as code um, just was different. I don't know.
Yeah. Yeah. Myriad of reasons. Maybe we'll talk about that in the next live stream we do. Appreciate you, Kevin. Let's catch up on the chat before we end the stream here. We got a lot to talk about.
And by the way, it says there's over 100 people watching, but I only see 8 thumbs up.
Yeah. Let's get those
Come
numbers
on,
up.
people. We need to see some thumbs up there.
Let's get
Or
those
we
thumbs
just,
up.
I'd like to think we didn't waste your time. So please give it some thumbs ups.
I appreciate
Thumbs
that.
up. Yeah.
A lot of good info was shared in this live stream. Like the stuff we talked about, the 1440 versus daily, the walk forward drawdown, all these nuanced things, you will not be able to pick up on a lot of content online. So I think there's a lot of value here, and definitely appreciate Kevin's time here. Okay, so let's see. I don't know where I left off. I'm gonna scroll up a little bit more. All right, we'll start here. For CCI, do you consider crossing above or below zero, Jacob or Kevin? I test everything, so yeah, I mean, I would definitely be including the zero value. I think it go -2. I think Kevin would say the same thing.
Yeah, I normally, if I was testing it, I would try a couple different variations of it. And I would consider those. I don't like testing like very similar strategies, but if you make them different enough, those are all unique strategies, and I feel comfortable testing each version.
Yep. I used to use TradeStation 9.5 because of all the bugs, and it had its own issues. I think Kevin's on
Yeah,
10.
yeah, the problem with 9.5 is you cannot accurately trade multiple strategies with the same instrument in the same account. Um, but you can in 10.0. And so that was one reason I went to 10.0 is once they had that all figured out, and that works flawlessly. So I have right now multiple markets where I'm trading multiple strategies, and they interact, or they don't interact, I should say, but the net is always right.
Good. Actually, I'm going to pop out this chat here. That way that people can see it on the screen. Okay, so Cloud is great. Cloud Sonnet 4.5 is what I use. Yeah, I haven't tried Claude yet. I did use DeepSeek for one video, but I don't use it personally. Kevin, what do you use ChatGPT for other than your YouTube videos where you test strategies from them?
So I also wrote a book of AI strategies that were just ideas from ChatGPT. So I use it for ideas mainly now. And I've started to go deeper where I say, hey, give me ideas that are not traditional indicators, that are things like university level research. So I use those. The other thing I do is I try to do some data analysis. Uh, so I'll give it data and I'll say, figure out correlations or, something, predictions and that kind of thing. And I haven't always had success with it. I kind of treat ChatGPT as an employee who's sort of new on the job. And you can tell it to do things and they're real enthusiastic and they come back and they do stuff, but it's usually wrong a lot of times. And then you tell it it's wrong and it says, "Oh yeah, thanks for catching that." I'm like, "Well, yeah, it acts like it knew it was wrong." So you just have to be careful with what you're using it for. So I'm not obviously no back testing, although it claims it can do some. I don't do that. I don't know if I'd ever rely on that. And you're probably the same way, Jacob, mainly because we both have a good process that we feel is, I don't know if AI could necessarily do better, or I'd have to see a lot of data first to prove it.
Yeah, ChatGPT. I mean, it doesn't have a back testing engine. I'm sure if you gave it data, maybe it could figure it out. But I'm not about to sit here for hours trying to get that to work when Ninja TradeStation can do it already. That's just something, it's better to, Kevin will say this too, but like the faster you can start building systems and train them, at least in a simulation account, the better. So the fastest way to do that is use an existing platform. Building your own platform from scratch, I don't recommend it unless you got millions of dollars in investment. It's not worth it. Use an existing platform. And as far as the LLM ChatGPTs and stuff, I use it for data collection, data cleaning, visualization, giving it reports, giving me responses. I don't use it to build systems. I don't recommend it. It's still not there yet. Okay. So, TradeStation seems to have a lot of issues with stop orders, particularly with set stop loss and set profit target. Is Ninja better at executing stop orders? I don't think it's better. It's maybe we'll save that for a separate video, but I wouldn't say it's better. It's definitely probably similar where it submits a stop order on the exchange or internally, and yeah, I can't speak of the issues on TradeStation. I know Kevin has a whole spiel about it. Kevin, go for it, or if you want to save it for
Yeah,
a separate video.
I got a spiel about everything. Um, Yeah, set stop loss and set profit target just do seem to have more issues in automated trading, not in the back test. So, what I've started to go to a lot are using uh, kind of what your code had, Jacob, of calculating the open position profit at the close of each bar. And if it's above or below a certain amount, then I'll just exit at the market. And that I find works a lot better. There is a drawback to it, where if you have a stop, if you're doing a daily bar, 14, 40-minute bar, your stop could have been hit in minute one and the market kept plummeting and you don't get out until the open of the next bar. So, um, but there's also times where the market dips down, hits your stop, and then reverses, and so maybe it doesn't get hit. So there's a trade-off with that, but I like using open position profit more than set stop loss, set profit target, just from an automation point of view.
Great answer. Okay, winding down here. Uh, what do you prefer more on testing daily or 1440? I think we semi-answered it. I would test both, but I'm leaning towards 1440, and I think Kevin is too.
Yeah, I do 1440 now.
Nice background pick, Kevin. Yeah, on your desktop wallpaper, it said like 2024, so people thought it was like a year-old video.
Uh, what's a 2024?
I think it's like a camera timestamp, but when you were sharing your screen, it said 2024.
Oh, yeah, that's yeah. Oh, so let me just show it just so people see what they're talking about. Wait, that is, how can I, hang on. I'm having trouble now. Oh, there we go. So, yeah, that's actually from my backyard. And
Yeah.
that was sunrise in Cleveland, Ohio, May 1st of 2024, where that's downtown Cleveland you're looking at, and then the sun, Lake Erie, that's Lake Erie, and over to the far left is where the sun was rising. And so that's just, I try to have these calming backgrounds, but it's from 2024. So yeah, I probably messed some people up. So I apologize for that.
It's all good.
People are observant. They say
They
things I
are.
wouldn't expect.
They are.
So I'll try to get some new pictures for y'all for the next time.
Yeah, update your LinkedIn and Facebook pics.
Yeah.
Okay, do.
Yeah, the picture you had for the YouTube video, I don't have any gray hair in that picture, so I like that one better. See, now there's a bunch of gray here on the side, so
I'll keep you younger, man. I got you. I'm looking out for you.
yeah. You wait, it'll happen to you.
It's already happening. Kevin, is that your own software you're using for Walk Forward?
Yeah, it's called Multi-Walk, and it was developed by a student of mine, and it's only available to students of my course, and because it incorporates so much of my process in it. But it's phenomenal tool. It makes your testing like at least a factor of 10 faster. So that's
Excellent.
my little commercial for that.
Well done.
And it also won an award too. So it's award-winning
Oh wow,
software.
good. Do. Kevin uses multi-walk. Yep. The data issues from different data servers is simply a TradeStation data bug, as it is not supposed to happen. Server infrastructure is not robust. Okay, good point there, Jim.
I was like, that sounds like one of my students. Yeah,
Yeah.
it is. Um, yeah, I mean, yeah, it. You have to realize with TradeStation, it's been around so long. Uh, that things when they developed their whole platform and their structure were there are things happening now that they never expected would ever be used for, and I suspect that's one of them, of these millisecond data differences and time differences. But um, yeah, luckily it's not that particular problem I talked about. It isn't that huge of a deal. It doesn't happen that often, but it does happen.
Yep. Uh, MT5 is full of issues too. Nice to know it's not that platform. It's every
Yeah,
platform. Yeah.
yeah,
Multi-walk is included with Kevin's platinum course. It is.
yes.
Yep. Also, if you guys are not subscribed to Kevin, do it right now. Go subscribe to his channel, Algo Trading with Kevin Davey on YouTube. Go do it now, because there is a ton of value there.
Yeah, and for people who are already coming from my list, make sure you subscribe to Jacob's stuff because he's got a lot of good info. I pick and choose, and Jacob does too, pick and chooses who he talks to and who he collaborates with. And I bet you 90% of the people who want to collaborate with me, I'm just like, no way. But Jacob's one of the few that I do too. So, check his stuff out.
Appreciate that. Great event. Really appreciate your time, Kevin Jacob. Thank you, Dave S. Tried ChatGPT, Perplexity, and Copilot. Underwhelmed unless it's something simple. Yeah, it depends what you really use it for. It's really good at analyzing Excel data. It's really good at maybe writing comments for your code, but it can be underwhelming in other areas like creating new strategies, and can sometimes it hallucinates where it like gets in these ruts of constantly spewing bad information for you, and that is all in your prompts and what you write. But great feedback on that, Keith. Max says, if you had to pick, would you rather run an entirely mean reversion or trend following portfolio? Interesting question. I wouldn't look at a portfolio that way. It all depends on, Kevin talks about this a lot, is your goals in your portfolio and how much you potentially want to make, how much you want to risk. Regardless if that's mean reverting or trend following, that's not a good question. I think more of the question is, does the portfolio meet your goals? Can you handle? Do you have enough capital to trade it? Does it meet your volatility needs? And then how you get there on each individual system comes up to testing. Obviously, trend following strategies, if you want to call them, can make more money on individual trades, but have higher loss rates per se. And then mean reversion can go either way. And we know instruments can be trending or mean reverting at any period of time. So I think it's more of what's your goals for the portfolio? How are you going to get there? Can you define those goals and then build strategies to get there? Kevin, do you want to add anything to that?
Yeah, I would just say I don't think it has to be an either or answer. I think it can be a both, and I think it should be a both because the more strategies, especially if they're uncorrelated, that you trade, uh, up until you get around 20 or 30 strategies, and that's probably you'll have enough diversification. But hey, have some trend following, have some mean reversion, have some for volatile markets, have some for boring, flat markets. Try to have a mix. That seems to be the best way.
Yeah, I ask it regularly to create Python code, but you have to know it yourself and verify it indeed. Agreed, Walter. I've built a complete trading system, worked a few years on it. Awesome, Vladimir. I hope it's making you money or getting there. Uh, Michael says it's a pretty picture, though, Kevin. Keith says, my name is Kevin and trading will make your hair gray. It can. It can.
That are kids, teenagers.
Mark says, what is your software called? He's talking to me, which you use defining strats. It's called StratGen. I tagged it below. Jim says, yes, Kevin, I am your student. All right, last one. I noticed some people backtest till today to see if alpha exits. I feel like it may cause some bias over fits. Could it be a valid approach? So it's a tough question to answer because I don't know about Kevin, but once again, I don't have the data to tell you, hey, backtesting from X and Y does better than till today. There is the argument that you want to backtest on recent data as patterns that are happening right now in any instrument could keep happening, and you want to use that recent data in your testing. And personally, one of the research projects I did was, systems that have made money in the last 9 months tend to do better. So that's not backtesting per se. That's usually running it in sim and then calculating the profits afterwards. So I don't know if that answers your question, Kim, but yeah. So Kim is asking, like, should you be backtesting until today type of thing, or should you backtest just older data and not use today's data?
Yeah, I mean, even if you were to use today's data, and there's nothing necessarily wrong with it, but even if it says, okay, you got a great strategy, I would still then wait and get some real-time data. Because the problem most people run into, I call it the Sunday night curse, where you're working late on the weekend trying to develop a strategy to work Monday morning, and you're testing all your data through the last Friday, and you keep testing variations and variations, and then finally you find something that works, and then you say, I'm going to start trading. It worked up until Friday. I'm going to start trading it tomorrow morning, and that's what's bad about that. So I don't necessarily have a problem with testing up through current day, but if you're going to do that, I would then wait 6, 9, 12 months, something, and make sure that the performance doesn't fall off the cliff. Usually, if you've overfit, it'll be pretty apparent pretty quickly that you did that, and it'll save you. It'll save you money. So,
Awesome. We got one more question. Sorry, Kevin. Hi, Kevin. You mentioned there are issues with the latest version of TradeStation that makes a software you use unusable. Could you kindly elaborate? Is it multi-walk?
yeah. So it's a problem. It's not a multi-walk problem, but what it is there's let me explain this. So TradeStation can create you can create like tables within TradeStation, like lines with data in them. And they did it's called like data view, something that's like a property or a class. I don't quite know all this. And what they did in the latest version was it was something that if you use that particular property or whatever, it causes multi-block or TradeStation as a whole just to crash. And it's not just multi-block, it's any tool that uses that particular property or class or whatever it is. And so there were a lot of people complaining about it. And then TradeStation apparently rolled out a fix today or a couple days ago. But Dave, the guy who built Multiwalk, um, he just reported to TradeStation that it's not fixed. He still has the crash. So that's what it is. Again, I always tell my students, just hang back. And there's no reason. There is literally no reason to stay on the latest version all the time, uh, unless you have some known bug that you know was corrected that was a big enough bug for you to say, I can't live with that older version.
Perfect. Okay, I appreciate that. I think we're going to end it here. We are running a little bit over time. Before we end it, please like the stream. And I got Kevin's YouTube channel here. Go give him a subscribe and go like his most recent video. If you want to learn more about algo trading and want to be better at algo trading, I recommend watching his videos as well because he is very knowledgeable about the subject. Appreciate all of you. Appreciate you, Kevin, for all the gold that you spewed in terms of algo trading. And I appreciate all of you for joining and learning from us. I think that's all, guys.
Yeah, and if I will say, if you guys want to, obviously it took Jacob a lot of time to prepare. It took my time too. If you guys like this, definitely leave a comment in the video, give it a thumbs up. Let us know that this was worth doing. Otherwise, this was just two idiots talking to each other and a bunch of people listening. We're not going to do it again if that's what people think. But if you got value out of it, let us know. That's how you get more. And that's, we love doing it. As you can see, I love talking about trading. I could do the 12-hour live stream if we wanted to, but we're not going to. But
maybe next
if
time.
people are interested, we'll do more.
Yep. Feedback's good. All right, guys. We'll see you next time. Appreciate all of you.